Education with the 4 majors minutes update for the 19th of June 2012. Going to look at the 4 majors, starting with the Euro against US dollar on our daily chart. Let's have a look and see what happened yesterday. Wow, what a week. Now that's what you call a trading range. A lot of upside movement to start with during the first part of the Asian going into the European session on the news of the pro win on Sunday, Greece elections, and then subsequently price reverted to the downside. A knee-jerk reaction to start with, and at the end of play yesterday we saw price closing well down the end of the wick. Not a very good sign. Primarily, yes, still upside. You can still see that price moving higher recently since the early part of June on this pullback. However, still failing to close above that all-important 12,6,500. A major support and resistance level. I'm just going to make it nice and dark here so you guys can all see it at 1265. This 12,6,500, if I just pull back, you can see clearly a major support back in 2010. Yet again in early January of 2012, and we've had a bounce and breakout in early May or latter part of May, and over the past couple months, weeks, in June we've seen price pulling back to the underside. A failed attempt here in early June, yet again another one a couple of days after that, a third attempt just recently, and yesterday's candle pretty much still still failing to close higher than that 1265. A long wick, a massive wick. This is a huge trading range. However, still battling to get that 1265 below it. So still major resistance here, guys. And I was just talking to a lot of our students yesterday, and I said, yeah, that's they wanting to know if I was long on anything, and I said to them, no, primarily based on the fact that this 1265 has not been beaten yet. We've had this is our third consecutive attempt at this prior high or price support area, and as long as it maintains this price support as a resistance level, then ultimately we should still be looking for that downside. The one thing to notice though, however, on our strategy template, is you can see that we have a blue arrow back in early June, and the candles of the past couple of days have gone blue. However, we still need 4 parts to the strategy, and that is the CTC the side has to go blue at the same time. That unfortunately will not occur. See, you have the same thing over here. Okay, as long as this 12,6,500 remains in play. Okay, it's a paramount this 1265 is breached, and we see a nice bullish engulfing pattern to confirm that. The more decisive the candle, i.e. the less wick, the more decisive, the more confirmation that is bullish in this case, and we should be targeting upside momentum. But as long as 12,6,500 remains in play, it's still confirming a major resistance level here, 1265. Okay, and until such time as that occurs, then we should be looking for the ultimately some sort of bearish indication of further sentiments or negative sentiment, with the drive to the downside back to these levels here at primarily the 23.6 and ultimately back down towards the 12,300 mark for the foreseeable. So price, guys, if you guys are looking for a definite buy or sell signal, unfortunately it's not going to be coming in any shape or form soon until we get a definite close above 1265 or definite close below the 23.6, which is 12,5,200, guys. We need either or. Okay, if this candle over here is definitely confirming negativity, then we need this candle, today's candle or the next day's candle, to close lower than this 23.6. Very, very important. This could be almost like a shooting star at a resistance level and a massive exhaustion candle. But if that is to be a definite exhaustion candle at a major resistance level, then this candle today has to close lower than the 1263. The 23.6 mark at the 12,5,200 mark. On to sterling. All know that 15,300 major support and resistance level. All you guys that follow my videos will know very well that 15,300 on sterling cable is a very, very, very strong support and resistance level. I don't have to show you the weekly to definitely to give you an indication of how strong the support and resistance level is. You can quite clearly see through the latter part of of 2010, start of 2011, October, November, December of 2011, and then 2012 we just recently had a nice bounce on there, a psychological bounce. So January we had a bounce, and then end of May we had a bounce after this massive downside move over here, and we've seen a bounce quite strong. 23.6, 38.2. You can see the price is now trading above 38.2, and we're heading towards a 50% line. That 50%, we have the 20, 50, and the 20, 200, and the 50 period moving average above us here at 15,800. So we've had a significant bounce to the upside. Let's go back to our daily now, and you can see that price has come in contact on our daily with the institution moving average here just below the 15,750 mark, which happens to be just below the 50% line of this retracement. So this is the May sell-off, and this is the low, and now we want to see how far price is likely to retrace. Ideally 23.6 being the first target. The longer 23.6, well, price traded above 23.6, then ultimately we should have been looking top side favorites, and that was happened the past couple of days. We saw this massive up move, 38.2, breached here at 1565, but went straight into this institution moving average, as well as a major support and resistance level in the past, and price has now come unstuck. So yesterday's trading range very small after the the Greece news. Very small trading range, however still finding potentially support now above a prior resistance level. Okay, so this, as long as price remains above 38.2 now, which is the 1566 mark, intraday we should be looking for price to retarget these areas here at 1575 and hopefully 15800 for the remainder of this week. So very, very important. You're setting yourself rules. Price has to do this, price has to do that in order for that to occur. Okay, so the rule is, the number one rule is, as long as this 38.2, the support over here, which you see we had a consolidation here, and 3 here at 1566. As long as this support at 38.2 still remains in favor, then we should see price building onto that and reattempting these highs. The quicker price falls below it and finds resistance now, the more likely we're going to target the 23.6, which is where we've come from. So you can see I'm giving it rules. You do that and I will do this. Okay, so if you find support through here, through the latter part, or for the start of today, then through to the US session, you could potentially see price moving towards that 1575 or 15800, and if it does that, then we could see it going or remaining to do so for the remainder of the week. The CTC trading this time very much still red on either side, so it's still very much in a negative trend, and as long as we're trading below that institution moving average, we should still be clear treating this as as a negative sentiment overall. So we have to get above this 15,800 very, very soon in order to see this as genuine upside favorite. The only thing we got blue, and the candle, today's candle is blue, however we're still trading below the institution, so this would count for nothing. It's still very much negative candle. So get above 15,800, then we start looking for potential long-term upside. Chief next, US dollar Swiss franc. This pair here, major support and resistance here at the 9,600 not too long ago. You can see price actually traded above that just recently, however not maintaining those levels. We'd like to see this breakout followed by the pullback, which happened, and then this bearish candle of here should have been a bullish bounce, and that's what would have happened. That's the ideal scenario, because it's a pullback and then the uptrend you can see quite clearly here. But this candle here cancelled all that upside movement, and in doing so brought the bears to the table, because it actually showed price was no longer really interested in these highs, and we saw price reverting to the underside of 960 there. And as long as price remained below 960, the ultimate outcome was going to be more of a negative picture or an outcome. And if I take the low over here of the start in May up to the high here we saw recently, you can see the pullback here at 23.6 was the first part here at 960, which happened to be price support and resistance. This is where we wanted to see this bounce to the upside to see further indication of upside movement. However, that failed to materialize with this bearish engulfing to the underside. Price would have targeted 38.2 then as our next target. That occurred, and then we saw those massive bounce to the upside. However, recently we failed to see price really building on that, and a reattempt of 38.2 occurred. Yesterday's candle we saw price trading lower than 38, heading towards the 50. Didn't quite make it to the downside, guys. However, by the end of the play on the US session, price pulled all the way back again, and we're back above the 38.2. So, as it stands now, as long as 38.2 is in play or price is trading above that, then ultimately we should be looking for price to retarget the 960. If we see price breaking below 950 again, or 38.2, then we're going to ultimately see price reverting to the downside and testing the 940 or just above the 940 here at the 50% retracement level. Get below that 61.8 and vice versa to the downside. Notice price has been making lower swings. A noticeable swing low here, which is lower than this one. So you can see price has been driven to the downside on our intermediate short-term time frames. Okay, so we'll get another, see the 20 period moving average up, price is wrestling with it as we speak. Failure to actually bounce higher and stay to these highs here, you can see price coming to sticky end here and reverting to the downside again. So just keep it in play, guys. There's not much to play with intraday here. You're not getting a lot of movement to the downside here. So just remember, it's 38.2. By the end of today, if price is still above 38.2, then we should be targeting 960. If it closes below 950 during the course of today, then ultimately through the US session we should see price falling towards at least to the 50% line here at the 940. Last pair of the day is US dollar Japanese yen. Let's have a look, see what's been happening recently with this one. Past couple of days we've seen a low swing here forming on this pair. You can see that after hitting these highs here at 8400, price has pretty much come unstuck and we've headed lower. Still maintaining those levels above the institution moving average, so still long-term positive. Okay, we took a massive move to the upside. However, we failed to see price really building on that, and over the past couple of months we've seen the US dollar falling back against the Japanese yen. In doing so, heading towards these retracement areas on the Fib 23, 38, 50. The 50 in particular was the previous breakout, the major support and resistance level breakout here at 80. 80, a very noticeable support and resistance level going months. And we were expecting some sort of bounce of here. With any major breakout, you expect a pullback and then a continuation to the upside. That failed to materialize here at 80. We saw price reverting to the underside of that, playing a bit of tic-tac-toe with it. And then we got this bearish engulfing here, which really clearly told us the sentiment was no longer in favor of upside sentiment, and price reverted to the downside in doing so. Support or Fib retracement levels 78.6 clearly coming into play not too long ago, and then we saw a bounce higher again. So 78.6 here after the 61 being breached, targeted, then we saw this bounce back up again. You can see as we speak now, price is testing the underside of prior 61.8 price support. Okay, each one of these levels over here has a support, so you can see over your price recently finding hesitation, not trading any higher for almost a full week, and then we had this bearish engulfing on Friday. That's taken us below the 61.8. However, yesterday's trading has seen price reverting to the underside. So we've seen a breakout, the pullback. If the pullback and we see price failing to trade above 61.8 again, this could be a breakout, pullback, and then a continuation in the overall direction of the trend, the overall trend. In this case, you can see is down. CTC is negative across the board. Yes, we have a blue candle. However, we are trading below a major support and resistance level here at 80. And as long as we continue to do so, then the overall sentiment is negative long term. Okay, so short term, we see price failing to break above close above 61.8. At this level where it's trading right now is 70. What level is that? Apologies, guys. 79. Then ultimately we should be looking for negative sentiment to carry us lower. Get below this price swing over here. We should definitely be targeting the 78.6 for the foreseeable future. That's it, guys. Hope it makes sense. Please, if you're using this particular template, please follow the rules and back it up with some sound money management, guys. There's nothing worse than having a great template to work with, giving you some fantastic signals. However, if you don't back it up with sound money management, rules, 2 to 1, looking for those targets, etc., it will amount to nothing. Okay, so just back it up with some sound money management. And the most important thing is just to keep it simple. Make sure you plot all your support and resistance levels, look for those major support resistance levels, and see where price is trading in relation to them. Look at your candlesticks to see if there's any confirmation signals in the sentiment, in the actual candlestick, to see what the psychological side of things, what the traders out there are doing or looking at the market. You'll be surprised how much candlesticks can actually dictate what's sentiment's doing, and you should be able to get a better understanding of where price is likely to go to because of that. So have a look and see how candlesticks are forming in and around major support and resistance levels to give you that benefit. Other than that, I hope you have a fantastic trading day. Please be aware there's news out. Make sure you know exactly what news is out today. There seems to be some noticeable ones that are sticking out. We do have the G20 summit meetings in play. The biggest 20, the 20 largest countries, financial countries in the world are meeting, and we've had some figures coming out that China's going to be throwing some money at the IMF war kitty against the Europe crisis. $43 billion, I think, equivalent. We just heard that Sterling's also going to be giving another $15 billion to the actual IMF. So we could see a lot of countries trying to throw some more money to try and stem this negativity we're seeing in Eurozone. So take that all on board, see how it all factors in, and then apply it. Okay. There are a lot of pairs trading at some major support and resistance levels. We've got to give them a bit of space to see better confirmation signals. At the moment now, I'm not trading anything primarily because of that. I like to see more decisiveness from the market, and I'm going to stand aside until we do get that. There's no need for me to rush. You've got to be very patient as a trader, and the more patient you become, the more profitable you shall become long term. Okay, enough from me. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.